The equity markets start the month off on a bit of a slow start. However, the trend that's been put in place since the day after Christmas remains intact. That post-Christmas trend we've been talking about has extended itself to near 17% in the month, basically in the month of January. Given the fact that we've seen this big bounce, almost 400 points in E-mini S&Ps, has led us to what is going to be a near 2,700 settlement on the week, which will be the first weekly settlement above 2,700. Going back to November. So obviously you can see we came way off, we've rallied, market seems to be building itself a clear trend, it's holding that trend despite the fact that we saw a modest pullback today, and really the market seems very well geared to continue to go higher unless something gets in the way. And right now the only something that can get in the way would either be the Fed, the data, or some kind of political mess that the market isn't really pricing in. So right now it looks steady as she goes in equities. And if you look at the VIX index, the volatility index, it's going to see its lowest settlement in some time, the 16 handle. We've been talking about the VIX hovering and remaining above 20. Well, it's finally going to see a weekly settlement below lowest weekly settlement since October, which is key because obviously the market now shedding off any fears that we've been talking about with trade China talks. We've been talking about Brexit. We've been talking about economic growth, Fed policy, you name it. It really is starting to shake all that off. And I think it's just going to kind of resume the trend higher. And that means lower VIX, lower levels of fear, lower concerns. So the market right now very comfortable where it's going and higher. And why shouldn't it be? The one thing we want to talk about here, Amazon. Amazon sales disappointed today. They kind of dragged down the tech sector, which kind of put a wet blanket over the market and kind of halted the rally and sort of actually took center stage over the jobs numbers, which were actually very strong. So we, albeit without the average hourly earnings increases that the economists had hoped for, but we did see strong jobs numbers. And the Fed right now wants to continue to see strong jobs numbers. They said the economy will remain strong in 2019. Maybe not the level we saw in 2018, but certainly will be something to keep an eye on and will remain strong. But Amazon really takes the center stage when you talk about a stock that's really taken over in not only its industry, but also the equity of the indices in general. So right now, Amazon kind of controlling things for today. A modest pullback in the equities across the board led by techs. However, next week we're going to start up. We have more earnings and obviously more after effect of what the Fed said this week, and that is likely they're going to be patient with more rate hikes, which is very equity friendly, something we've seen over the last 10 years, despite the fact that they have made a modest dent in rate increases since late 2015. It just seems to me the market right now looks to favor a pause in the Fed's rate hike cycle for some time, and that should not only fuel equities higher, but definitely we'll see them test those, probably get near those all-time highs if the Fed is going to remain on hold for the remainder of 2019. That has yet to be seen, but right now equities looking very strong.